Good morning, everybody. Todd Hanley here, your Senior Loan Officer with United Direct Lending, here to give you your Monday morning mortgage market update. Hope you all had a fantastic weekend. Let's jump into it because it's going to be quite the week. Buckle up. Why? Well, let's see here. This morning, we're already up a little bit on the 10-year. We were just up about 3 basis points, but it pulled back. Already some reaction to what could possibly happen this week. We have a lot of Fed talk and some inflation data. But let's jump into the mortgage rates from last week and see what happened, because pretty much the same thing as the last 3-4 weeks. 30-year fixed still hovering around 7. The 30-year FHA still at 6.5. 30-year VA still at 6.5. And the jumbo still at 7.25. Not much has changed at all. Everything's kind of in a holding pattern because, once again, I feel the economy is slowing. Other people feel inflation is actually getting stronger. So there's that little bit of a tug of war that we have going on. And once the data really starts to substantiate a slower economy, you're going to see interest rates fall even further. Now, what do we have this week for the economic calendar? Well, starting today, we have not the most market-moving data, just a little bit of inflation expectations from June, and then some May consumer credit. Tomorrow we have a testimony from the Fed Chair Powell, and then we have Janet Yellen. Let's hope the bond market tomorrow isn't smelling, yelling, and selling, because that's going to put rates up. And then we have a 3-year note auction tomorrow. Once again, those 1 p.m. note auctions do have the potential to move markets. And then we have Fed Bowman. Watch out for that. The main stuff is going to come through on Thursday, but Wednesday we have another Fed Chair Powell speech, and then we have a 10-year note auction at 1 p.m. Those will be the biggest market movers. Not sure how much new information these Fed guys are going to really, and gals might give, but I don't think they're going to move markets much, but they do have the potential. Thursday's the big day. We have Consumer Price Index, which is the most widely watched inflation gauge. 30% of that is made up of just shelter inflation, and the majority of that shelter is OER, which is owner's equivalent rent. Well, let's just hope it's not too strong. Also, too, we're looking at core CPI versus headline. Why? Because the headline, the food and energy, well, the Fed policy doesn't affect that as much. And then once again, we have some bond auctions again on Thursday at 1 p.m., 30-year bond auctions. Gotta watch out for those. They're market moving. On Friday, we have more inflation data coming out, the PPI, which is Producer Price Index. Now, this is pretty much the cost for manufacturers and those producing products, and this is pretty much the cost that they're paying to produce those products. Has potential to move markets. The CPI will be the most widely watched, but keep an eye out for the PPI on Friday. And then we have inflation sentiment for July and a little bit of consumer sentiment here at 10 a.m. So definitely some precarious times this week. We'll see what's going to happen. It's obviously impossible to predict, but the long-term charts will give us more insight. So as you can see, we are definitely sitting here in what's called a wedge pattern, right? The price has moved its way into a wedge, doesn't know what to do, and we're about to find out which way it's going to go because the data is going to support that. I personally think we're coming down here. I think rates will be in the low 6s sooner than they're going to be in the high 7s. I don't have a crystal ball, but I do pay attention to the economy closely. So this week, once again, will give us some great information. Pay attention, and fingers crossed that rates go lower. Thanks so much for watching. Have a great week.